My name is Andre Earl, and I have the distinct pleasure to be your moderator for this very exciting forum entitled Protecting Your Money in Today's Economy. And I really have to take my hat off to the CEO and members of staff of the Jamaica Deposit Insurance Corporation that is hosting this forum in conjunction with the Bank of Jamaica, the Financial Services Commission, and the Jamaica Stock Exchange. And the reason I have to say that, I have to take my hat off to them, is because today for many people it's payday. It's a Friday, and many people get paid today because it's the end of the week. Others get paid, who are monthly paid, still get paid today, many of them, because they would normally be paid on the 25th. And because that is Sunday, then the amount is paid out from today. So it's a very wise choice update by our hosts in ensuring that we are careful about our money. Now, let me see the hands of those persons in the audience who has money to throw away. Just put up your hand for me. You have money to dash away. All of you, just raise your hands to me who have money to throw away. All right, well, those, you, sir, and you, madam, this forum is not for you. If you have money to dash away, you are at the wrong venue. But if you don't have money to throw away, then this is the correct place for you to be this evening. There's no better place for you to be this evening other than at this forum. So let me extend a very warm welcome to everyone and let you know that we are punctual. We started at 6. We are expecting the representative from the Jamaica Stock Exchange to be joining us shortly, so that's the only reason why that seat is vacant at the moment. We're having a few technical challenges, so we are going to somewhat delay the official start of the presentations because we want everybody to be able to participate by being able to view the screen so you can follow the PowerPoint presentations. And so we have some challenges we're trying to sort out. It's going to take about 10 minutes for one this evening. I want to let you know what it is we hope to accomplish. Firstly, remember that the topic is protecting your money in today's economy. And what we're hoping to achieve is that at the end of the day, which is by 8 o'clock this evening, you should learn about benefits under the deposit insurance scheme. You should learn about best practice standards for financial institutions and what the credit reporting bill means for borrowers. You will learn about planning for your retirement. And some people mistakenly believe that retirement planning starts when you are 59. That is a mistake. Some people here sitting down are of the view that, Shaman, retirement planning is for old people, is who I'm talking about. Well, guess what? As you start to work, the moment you start to work, you should be planning what is going to happen on retirement, putting a little bit away each month, each payday. So, you're going to learn about planning for your retirement. And if you don't believe me, ask anybody who is on the verge of retiring or who has already retired when they think is the best time to start planning. And they will tell you, many of them, that they are sorry that they didn't start from day one when they were working. You're also going to be learning about investing in the stock market. There are some microphones in the aisles, and at the end of the presentations, I'm going to invite you to ask questions so that you can raise all the issues you have with our distinguished panel. I'm going to be introducing the panel shortly, but for the time being, I will tell you their names. We have Miss Antoinette McCain, and she is the Chief Executive Officer of the Jamaica Deposit Insurance Corporation. She's to my immediate left. We also have Mr. Damian McIntosh. He's the Assistant Director of the Financial Institutions Supervisory Division of the Bank of Jamaica. He's to Ms. McCain's left. And then we now have, I'm happy to say, Mr. Wentworth Graham, the Chief Regulatory Officer of the Jamaica Stock Exchange. And to crown it off, this distinguished panel, you have Mrs. Loretta Reed Pitt, who is the General Counsel at the Financial Services Commission. So we have a very distinguished panel. And I want you to think of your questions, all those questions that you had. You think about them, write them down if you're going to forget something that somebody has said that you wanted to question or seek clarification on, and make sure that at the end you ask your question. If there's anyone who, some of us I know are mic shy, so we don't like to go to the microphone, but we have a burning question that is bothering us. What I'm going to suggest is that you write it down and give the question to a lady who I'm going to ask to identify herself now. Marjorie, can you just put up your hand, your two hands for me so people can see you, and wave them? Wave them like that, yes. Wave them. Marjorie's right at the back. And Marjorie will collect those questions from you so I can raise the questions in case it is you have a question but you don't really want to go to the microphone, you're mic shy. I'd be happy to ask the question, to pose the question at the end for you. For the others of you, certainly we want you to go ahead and ask the questions as much as possible. Now, judging from the age group that I see in this audience, including the likes of one Crafton Miller, it is obvious to me that many of you here are too young to remember the financial meltdown of the 1990s. Many of you don't know anything about that. You only hear about it or you read about it. Well, let me tell you, I was around, and it was a very difficult period in Jamaica's financial life. You'd be at work, busy doing your work, and you get a call. I would get a call. Andre, you have any money at such and such a bank? Yes. What happened? I hear that the bank going to close down. I say, you serious? No, man, that is rubbish. That bank too big, it can't close down. You stay there. And I would get worried. So I would call the bank and say to my contacts at the bank, what is this I hear about closing down? And the bank would say, well, we don't know anything about that, but there's a massive crowd here, and everybody is collecting their money. So I would rush, drive up to the bank, run in, get my money, which I got by way of a draft. Just like how you say draft on this program, it stands for bank draft. And I would take that money. But of course, it's a draft. So what you're going to do with a draft? You have to lodge it at another bank. So I would take the draft and lodge at another bank. But by the time I reached that other bank, I started to hear about problems with that other bank, about that bank going to close down. So I said, well, I can't really leave my money there either. It was a very, very difficult time in Jamaica. So our regulators and the authorities thought it wise to get an organization that would shield us from this rainy weather. That organization is the Jamaica Deposit Insurance Corporation, and their logo includes an umbrella to protect you when you have that rainy day. And so when it is that money is put at risk in a deposit-taking institution, which you're going to hear a lot more about later, then you have that protection. So that was one of the moves, and that's one of the reasons we're here talking about money. All right. Okay.
I don't know.
As I said, we are still sorting out the technical difficulties. I expect that we shall solve that very shortly. The other story I want to share with you, apart from those difficult times in the 1990s, is that later on, this is in like the year now 2002, many people ran and started to pull their monies from their bank accounts to lodge with certain institutions. Well, not institutions, to lodge with certain schemes. They call them unregistered financial organizations, otherwise called UFOs. These unregistered schemes, and you know some of the names, the Cash Plus, the Olint and others, many people put money in there and at the end of the day lost a lot. Some people lost this much, and some people, I'm sorry to say, lost much more than that. There are people who mortgaged their houses, took their retirement, all their pension, borrowed money, and put it all in some of these schemes to make money, and lost it all. So it's in that context that we are speaking this evening about protecting your money in today's economy. All right, we don't want to reopen any old wounds, but what we do want to do is to ensure that you are informed, that you are wise, that you are made knowledgeable about protecting your money in today's economy. So, with that, that concludes my introduction and my welcome and opening remarks. I'm going to allow you to listen to some more music that you were hearing before until we have sorted out the technical challenge. As I said, we need to get the technical challenge sorted out before we can start the presentations. And as soon as we have done that, I expect another few minutes. Oh, we have sorted it out? So we are good to go. Yes, so we are good to go. And with that, I am going to introduce our very first speaker. Looking at her, one would never have guessed that our first speaker has been an attorney for over 23 years. She has tremendous expertise in corporate, commercial, banking, and financial regulation, law, and best practices. She previously served for 7 years on the legal team at the Bank of Jamaica, playing a critical role in the establishment of the deposit insurance scheme through her involvement in its legal framework. Subsequently, she assumed the position of legal counsel and corporate secretary of the Jamaica Deposit Insurance Corporation, JDIC, for 3 years, and was later appointed its chief executive officer effective January 1, 2007. Between 2007 and 2009, she was a member of the Executive Council of the International Association of Deposit Insurers, chairing its Caribbean regional and legal committees. It is with profound pleasure that I ask you now to welcome the CEO of the JDIC, Miss Antoinette McCain, who will address us on protecting your deposits.
Let me, as the host of this forum, I'd just like to apologize for the late start, and I would like to thank all persons here, in particular the members of the public who saw our advertisements and came out. This is really a forum for the public, and we mean every single member of the Jamaican public. I was so happy to have had Mr. Earl moderate this evening, because he was able to, in the time that we had, to just remind us as to what happens when you don't have a deposit insurance system and the difficulties we experienced in the 1990s. And it was arising out of those challenges of the 1990s, challenges in the financial system, that the deposit insurance scheme was born. So that was in 1998. In fact, the Jamaica Deposit Insurance Corporation was established. Part of our mandate is to inform the public about the protections in your financial system, and that is in your regulated financial system. Because to the extent that the financial system is not regulated, and those institutions that are not regulated, there really are no protections. And we have just experienced that even more recently in the 2008-2009 period. So there are always lessons that we have to learn, and unfortunately some of us will learn them the hard way. But we are here, the JDIC is here, to keep the public informed, to let you know what the protections in the systems are, so that you can make safe decisions, wise decisions about where you put your hard-earned money. I am so thankful that the Bank of Jamaica, who normally participates with us, and the Financial Services Commission and the Jamaica Stock Exchange are here. This is the first time we're doing this forum out in a public space in this way, but we have done forums from time to time, but we always do them in hotels. And I thought that to really reach the public, we would start doing them outside. So all are invited. You'll notice that we have a business casual format. So all in your sneakers, all of those running around the park, all walking on the road, all are welcome here, because this forum is for you. The presentation this evening by the JDIC is protecting your deposits. And, sorry, I am the one who controls this. Banks have a special place in the economy, and depositors must therefore be protected. Companies, banks are really companies that are privately owned and controlled by shareholders, and they are for profit. That's why banks operate. They operate for profit, just like any other company. But because of that special role that they play in the economy, this makes them subject to regulation. And that is usually regulation, obviously not by themselves, but by the government. And that the governmental system, we here are the representatives of that system. Now, financial institutions are important to our economy because they bring savers and borrowers together. The economy the deposits that you put in financial institutions are the same monies that the banks use to lend in the economy. And usually they are lending your money, which you can call upon at short notice for long periods. And so banks tend to be risky. So banks are in the business of managing that risk. But sometimes, with their best efforts, the management of that risk is not as it ought to be. And so there are times when banks will fail. But that important role they play in the economy of bringing you depositors and borrowers together is why we have to protect depositors. Now, what is this system of regulation that we have? And I'm going to just give you the diagrammatic structure of this system of regulation. And it starts with the Ministry of Finance. The Minister of Finance is responsible for the policy regarding the system, the licensing and regulation of deposit-taking institutions. And the regulated ones are commercial banks, merchant banks, and building societies. And I'm emphasizing that because, as Mr. Earl reminded you about the unregulated ones and the problems it has caused and the grief participating in those types of institutions cause for so many people. So under the Ministry of Finance structure is the Jamaica Deposit Insurance Corporation, the Bank of Jamaica, the Financial Services Commission. These three entities are created under statutes, laws that were passed in Parliament to ensure that there is the power in these institutions to properly regulate and protect the system. Together, the institutions there also meet in a financial regulatory council, and we meet quarterly at the very least to discuss how the system is operating and the condition of financial institutions from time to time. So that is the superstructure of the regulation of your banks. That is a superstructure designed to protect your deposits. Overall, you will hear from the Bank of Jamaica on how that regulation is done and the best practice standards that are applied to ensure it's done adequately. So to the small version that just relates to deposit protection, you have the Minister of Finance, the JDIC, and the Bank of Jamaica. I'm making these important distinctions because the JDIC only protects financial deposit-taking financial institutions that are regulated and supervised by the Bank of Jamaica. Why deposit insurance? Deposit insurance is designed to protect small depositors because small depositors are less likely to be in a position to assess the financial risk of a deposit-taking institution. So we protect them. Deposit insurance, therefore, helps to build confidence in the financial system as it provides certainty to depositors as to what they stand to lose, if anything at all, in the event that their bank goes down. And this is part and parcel of the public education, so you can know the limits of that protection, because when you know the limits of that protection, you know exactly how to structure your savings. And Mr. Earl made such excellent points at the beginning of this. He asked you, who can afford to lose their money? And if you can't, you don't need to be here. So we know, frankly, that most of us cannot afford to lose our money. So we need to educate ourselves on the protections in the system to make sure that we do not lose our hard-earned funds. Now, just a little background, so you know that we're not on a frolic of our own. We're not doing this thing without some framework and some structure. Over 120 countries in the world have an explicit deposit insurance scheme, as we do. Explicit means that it's defined in a law, in legislation. It's certain. You know exactly what it is. And here is why we're telling you exactly what it is. 120 countries in the world have this. And internationally, deposit insurance generally covers 90% of depositors in the system and 40% of the dollar value of deposits in the deposit-taking system. So that's generally the best practice. You will see what the state of Jamaica is later on in this presentation, and you will see that we are there. We are at international standards. And of course, standards change from time to time. So we keep abreast of all the international standards, and we make sure that we are in tandem with them to protect savers in Jamaica. So, JDIC's primary role is to manage the deposit insurance scheme. In Jamaica to protect depositors from loss of all of their deposits or part of their deposits, depending on how much deposits you have in your financial institutions. As I indicated before, the corporation is established under a statute passed in the Parliament of Jamaica. So it's the law of our land. JDIC has to pay this out to pay out to depositors in the event their financial institutions cannot do it. It is not optional. We have to do it. And so in that scheme, the JDIC is able to levy premiums on policyholders. Now, policyholders is what? Is that term we use to describe the financial institutions that are regulated by the Bank of Jamaica and have deposit insurance, are insured by JDIC. Those are the policyholders. So you'll hear that term throughout the presentation, and that's what policyholder means. We have a few policyholders over on the side there. Those are our banks. They're here, and we're happy to have them here because, as I indicated in the beginning of the presentation, their banks are special. They're important to the economy, but just as much important are depositors, clearly. So JDIC can levy premiums on these financial institutions. So they pay us these premiums. We invest it in a deposit insurance fund. That's the third bullet down. And we manage that deposit insurance fund. We invest it. It grows. We keep that money safe. We invest it in safe investments so that when something happens, we can call upon those funds. JDIC also has the power to borrow. So just in the event those funds are not necessarily sufficient at the time, we can borrow and make good so that we can pay depositors out. We also issue to our policyholders deposit insurance policies, and we monitor how well they're complying with those policies. And those policies help us to guide the policyholders in what we need them to do. It helps us for them to give us information, certain information that we need from time to time so that we know exactly what's going on. We know how much deposit liabilities they have in their banks, so we know how much money we may have to pay out in the future. JDIC also facilitates efficient solutions where banks might not be may not fail completely, but are in difficulties. So we also have powers to assist in working banks out so that they don't fail. And lastly, the very last thing JDIC wants to do is to have to pay out depositors. That's really the last thing we want to do. We want our banks to remain safe and sound. We want depositors to be able to confidently place their deposits and be confident that those deposits will be safe. That's really what we want. But as we will know if we take our history, look at the world and banking crisis throughout the world, and the recent global financial crisis from which the world is still trying to extract itself, we know banks will fail because they're managing risk, and risk that is changing all the time. So we may have to pay out depositors at some point in time. So, but before that event, depositors need to know what the system provides for them so that they're confident. So that if a bank is in difficulty, they don't have to do that run on the bank thing. On the outside broadcast, the moderator had reminded us of how in the United Kingdom there was a run on the Northern Rock Bank in the United Kingdom in 2008, I think it was. And when you speak with the British UK regulators, what they will tell you is that they did have a deposit insurance scheme, but it was not properly or adequately publicized. So the reality is that those people who were running on the banks had no idea that most of their deposits were actually protected. So hence, again, this is why we do these public forums. Because you can look at other countries where there's a long-standing deposit insurance schemes. For example, the United States, they have had hundreds of bank failures, but no runs, because people within that system understand the protections of their deposit insurance scheme. So the payout, while we're here, the last thing we really want to do, we want your deposits, you to be able to have access to all your deposits all of the time. Now, institutions insured under the scheme, as I said before, we call them policyholders. Only deposit-taking financial institutions regulated and supervised by the Bank of Jamaica are insured under the deposit insurance scheme. And these are commercial banks. There are 7 of them. Some of them are represented here. Merchant banks, there are 2 of them in our economy. And building societies, there are 4 of them. Only these institutions are policyholders of the JDIC. And once they're regulated by the Bank of Jamaica, which they are, it is compulsory. Those words down there, those 2 words, they must be in the deposit insurance scheme. So once your savings are with any of these types of institutions, you don't have to ask whether or not they are they are covered by the deposit insurance scheme. You, the depositor, have to do nothing. Once you put your savings in there, are automatically covered. And what are the deposits that are insured? Your savings accounts, your checking accounts, your certificates of deposit, your CDs, your money orders and drafts. Foreign currency deposits are also covered by JDIC, but we'll pay you in the Jamaica dollar equivalent of that. Now, there are some new things on the market, that prepaid cards, where sometimes employers will allow their employees to have prepaid cards, and what the employer does is have their bank load those cards with the employee's salaries, their payroll, and the employee can take those cards and access their funds at banks, so they don't have to go paying their employees checks anymore or having to deposit the funds in a bank for the employee. So the employee has, so those are also covered by deposit insurance, but only deposits. All of these categories are deposits. And the coverage limit is up to $600,000 Jamaican dollars per depositor per institution. Now, this is where it's really interesting. What does that mean? Is it enough? Is $600,000 enough? And as we go on in the presentation, you'll see that it really is pretty close to enough. Now, per depositor, what do we mean by per depositor? When you go to open a bank account, you can open that account as an individual account holder. You go, John Brown, you open an account. You alone, you open that account. You are you're opening it as an individual only. You can also open accounts as joint accounts, where John Brown and Mary Brown have an account together, one account. That's a joint account. Or it can be John Brown, Mary Brown, James Turner. So you can have 3 people on a joint account, but it's joint because they all hold the one account. We consider that to be a separate and a different account from an individual account. So that's what we mean by per depositor. The depositor in that case is the individual. The depositor is also a joint holder. Business accounts are also separate depositors. Trust accounts and nominee accounts are also separate depositors. So when we say per depositor, we're talking about classes of depositors who are individual account holders, classes of depositors who are joint account holders, classes of depositors who are business account holders, and classes of depositors who hold and deposit in trust for other persons, trust accounts. Now, I'm just giving a very simple example of what this per depositor means. We have brochures here which give you far more detailed explanation, but very simply, for example, example, the account name in the bank, John Brown, alone. John Brown, he's an individual account holder. He has a checking account that has $100,000 in it. He also has in his name, John Brown, another account, a savings account, which has $700,000. So in total, in that bank, he has $800,000. Deposit insurance would pay him $600,000. Because what we have done as an individual account holder, we have merged those two accounts because he holds them individually, each as an individual, and we pay him up to that $600,000 maximum limit. But here is John again. John Brown has an individual account. He has a checking account, $100,000. He has a savings account, $700,000. as an individual. So in total, as an individual, he has $800,000 in the bank in two different types of accounts. Now, he also is involved in another account in the bank. That is John Brown and Mary Brown. They hold that account jointly. So they have that as a savings account, and they have $800,000 in that. So the total they have in that joint account as well, $800,000. In those two cases, this is what would happen. Deposit insurance would pay John Brown as the individual $600,000, and it would also pay John Brown and Mary Brown as the joint account holders also up to $600,000 of that $600,000 of that $800,000 in the joint account. Now, if it was John Brown and Mary Smith holding an account together, that would be a different joint account, which would also be entitled to a maximum of $600,000. And we could go on and on like that. And I'm not telling you you must go and set up your accounts like that, but there's a little clue there, you know, that you can get more than $600,000 out of this thing. Now, I just wanted to just say something about the trust account, because we're more familiar with the individual accounts and we're familiar with the joint accounts. The trust account, I mean, very simply, without getting into the law of it, is where a depositor holds an account. He has an account in a bank, but he's really holding it on behalf of another person or a number of other persons. And that other person or those other persons are the ones who are really legally entitled to the ownership of the funds in that account. You know, there are a number of accounts in our system, deposit accounts, of which many of us here could actually be depositors and entitled, but we don't know. For example, lawyers by law must have a client's account. But at the bank, it's just in the lawyer's name. But that account really holds the funds of his clients. And at his office, he'd have a record of which client has how much money that he puts in that trust account. Under the deposit insurance scheme, by virtue of amendments that we made in February of this year, each client in that lawyer's trust account would have an entitlement to deposit insurance of up to $600,000. I mean, under the rules, if they have more than 600,000, obviously. But that's very important because there are a number of other trust accounts in which many of us may be actual beneficiaries. For example, the Administrator General's office, by law, has to have an account in which it puts the funds of the estates that it is administering. So, in law now, under the Deposit Insurance Act, JDIC would have to pay out deposit insurance to each of those estates up to that $600,000. And there are a number of other accounts that are held for the benefit of other people, but they're only held in one name. And they're really trust accounts. They're really accounts held for the benefit of others. So in that scenario, you could be a beneficiary on a trust account. In addition to being an individual account holder in the same bank, in addition to being a joint account holder in the same bank. And in all those three scenarios, you'd be entitled to $600,000 in each case. So this is very important information. As a recent amendment to our law. Now, when we talk about per institution, this is very important. Per depositor, we just define who that depositor is, and we know that depositor can be an individual, a joint account holder, a company, or a trust account. We know that now, but per institutions. Each policyholder is really one institution. Each bank is one company, but it has many branches. So when we talk about the deposit insurance payment, we're talking about the one bank. So if you have an account in a branch of one bank in Savlamar, and the same bank has a branch in Lucy, that's one bank. So that's what we mean by per institution. So what the accounts you have in each branch, to the extent that they fall under the different ownership categories, it's the same deposit insurance. So it's not per branch, it's per bank, per institution. Now, here is when I asked the question, do you think 600,000 is enough? Well, we take care to try to ensure that the coverage limit is credible. Credible to whom? Credible to the deposit. I mean, is that $600,000 meaningful to depositors in Jamaica? And we review these things from time to time because we know sometimes inflation destroys the value of our money. So we look at things like inflation. We look at things like movements in the exchange rate to see whether or not the value of the coverage is meaningful to persons in Jamaica. And this is a nice pie chart. The part of the pie chart that is in yellow is the amount of accounts within our regulated deposit taking system that is covered, fully covered by deposit insurance. So it's just, and that is 97.2% of the accounts in our system are fully covered by deposit insurance. And so that little green spot there, little thing that looks like a cheese slice sticking out there, that's what is not covered. So is the limit credible? I would say for the moment that it is that limit. But of course, as I said, we review it all the time. I don't know of any country that reviewed it downwards, but anyway, so because review mean could be up or down, but we do to ensure that depositors feel that the amount is credible. In fact, the average deposit balance in our banks is at $119,000. So on average, depositors hold $119,000 in deposit accounts in this country, on average. So the $600,000 limit you can see is well above what the average account holder has in their bank account. Now, you may ask, why not 100%? So why don't we cover the rest of it? The fact of the matter is that, you know, deposit insurance is not insurance like you'd put on your motor car or on your life, but there's a similarity. We have to make sure that when we cover, the amount of coverage that we give does not cause people to take risk. So that we try to, in fancy language they say sometimes, we try to make sure we don't create moral hazard. We don't encourage people to take risk and not to take care. So we never would give 100% coverage. Then no bank would have to try to be safe and sound, because every depositor would get back every penny. I mean, that kind of system would be way too costly for any country to run, and totally unnecessary too. So we believe that the deposit insurance coverage limit is a credible limit based on the level of accounts within the system that are fully covered up to that $600,000 limit. And once the financial institution is in trouble and cannot pay, we have to make payments to depositors. And we have in our statute a time frame of 3 months to make those payments, up to 3 months. After that period, we have to pay interest, and that's a commercial interest rate to depositors, any depositor who has not received all or a portion of their funds. So that $600,000 is guaranteed from the JDIC. Now, what you say of amounts over that $600,000 limit, if you have funds over $600,000, what happens? Well, the bank would be put in liquidation because it would be closing, and that's why we would have paid you the deposit insurance limit. And the liquidator would be obliged, if there are funds, once the bank is liquidated, to pay the depositor the balance of that, of whatever their deposit was above that $600,000 limit. That is what would happen. So you're not totally exposed for the balance. It's just to the extent that a liquidator can find sufficient funds at the end of the day to pay depositors the balance of their funds. Now, I just want to emphasize what institutions are not insured by JDIC. Just for the emphasis again, credit unions are not insured by the JDIC. Money market brokers are not insured by the JDIC. Investment firms, not insured. Unit trusts and mutual funds, not insured. Insurance companies, not insured. Pension funds, not insured. We have the Financial Services Commission representative here. Now, they regulate those institutions, and they will talk to you more about those institutions. So just to make the point even clearer, what products are not covered by deposit insurance? Deposits and shares of credit unions are not covered by the JDIC. Investments are not covered. That is your commercial paper, your broker or your managed funds, repo transactions, debentures are not covered by the JDIC. Now, the guardians of the financial system, who are they? They're not just us here who are by law obliged to protect the system, but the boards and management of institutions also have a duty to run their institutions properly and manage the risk in their institutions. But the best persons are savers and investors, to come to forums like these, to ask the right questions, to get educated, to get the knowledge. And in the grand scheme of everything here, I would actually put savers and investors on top. Ask the questions, come to the forums, get educated. Thank you very much.
Thank you very much, Madam CEO of the Jamaica Deposit Insurance Corporation, Miss Antoinette McCain, for that very lucid and articulate delivery on the particular topic that you had, which is protecting your deposits. We're going to move straight into our next presenter's speech, and I'll introduce him now. With over 12 years experience in bank regulation and supervision, our next speaker is eminently qualified. He's currently an assistant director with the Bank of Jamaica and has gained extensive knowledge and skills from the Board of Governors of the Federal Reserve System, the Bank for International Settlements, the Financial Stability Institute, and the Caribbean Financial Action. Task Force. At the BOJ, he undertakes research and makes recommendations for formulating and enhancing Jamaica's legislative and regulatory frameworks. In other words, he helps to keep our financial institutions under manners. He received a Citibank scholarship to complete an undergraduate degree with honors in accounting and management from the University of the West Indies. Certified management accountant, and he's also a certified half marathon runner. He must certainly be certified to advise us on how the central bank ensures best practices in financial institutions. Ladies and gentlemen, please give a bona fide and certified welcome to Mr. Damian McIntosh from the Bank of Jamaica.
Thank you, Mr. Moderator. I hope you can appreciate that as a runner, it's kind of difficult for me to sit down. So this is as much exercise I will get for. So I hope you can oblige me by me standing up and maybe walking around a little bit. The role of the Bank of Jamaica is, it is really an awesome responsibility in terms of ensuring as much as possible that depositors' funds are protected. I am glad I came after Antoinette's presentation because she spoke about the role of the JDIC in the event of a bank failure. Now, where the Bank of Jamaica comes in is try to, as much as possible, ensure that there is a robust infrastructure in place. For financial institutions, and that the regulatory environment for financial institutions is such that it minimizes that bank failure. So really, we want to see and ensure as much as possible that the environment is such that we never call an Antoinette. That's really our modus operandi. Now, I'll skip through a couple of my slides because Antoinette mentioned some of them. in terms of the regulatory architecture that is in place for deposit-taking institutions and the financial sector, and really go to the heart of what it is that BOJ does in terms of what it means to regulate and supervise financial institutions. Now, we have primary oversight for financial institutions. And what does that mean? That means that we really assess the financial safety and soundness of financial institutions. And why do we do that? We do that because we have an objective, right? What is our objective? We want to promote the safety and soundness of financial institutions, and we also want to promote an efficient and effective banking system. Because the core of any country and the core of any economy is its banking system. And therefore, as the police of that banking system, we want to ensure that the framework in place is sufficient enough in order to ensure that we can maintain the integrity of that financial system. And so, it is important for you to understand that as the Bank of Jamaica, our responsibility is not to manage a financial institution. The management of a financial institution rests with its board of directors and its senior managers. Our responsibility is to ensure that the regulatory framework that is in place is sufficient, is sound, and it is robust for the financial institutions, management, and senior managers to operate in. And so who do we supervise? Who do we regulate? We supervise and regulate commercial banks that are licensed under the Banking Act, financial institutions, particularly merchant banks that are licensed under the Financial Institutions Act, and building societies that are licensed under the Building Societies Act. And Antoinette mentioned the 7 commercial banks that we have currently in our deposit-taking system, the 2 merchant banks, as well as the 4 building societies. Now, how do we attempt as far as possible to protect your money? We have a number of supervisory tools that we employ, and first and foremost is to ensure that there is a legal system in place. And so the Bank of Jamaica has a responsibility as far as possible to formulate and develop laws and regulations that financial institutions, particularly deposit-taking institutions, are required to comply and adhere to. We also, in instances, issue standards of sound best practices which are mere guidelines that sort of point financial institutions on the path that will assist them in protecting depositors' funds. We also conduct on-site examinations, and each of these I will go into later in my presentation, and that involves physically maintaining a presence at the financial institution and examining their operations. But while we're not on-site, we do monitor financial institutions off-site. We also engage as far as possible in relationship management. Now, what is it that we do in terms of our regulation and supervision of financial institutions? We conduct what is referred to as full scope monitoring of a financial institution, or we employ a risk-focused approach. Full scope monitoring entails looking at almost all the aspects of a financial institution's operations, becoming familiar with the risk that they're exposed to, and seen as far as possible the resources that they have in place to manage these risks, whether that they're cognizant and knowledgeable of these risks, and whether that their risk management infrastructure is sufficient enough to sort of cushion the potential losses that these risk exposure face. But the risk focus element of that allows us to identify those high risk areas that a bank is exposed to. And so we will examine as far as possible those high-risk areas, because those high-risk areas are the likelihood or present the greatest probability for losses for a financial institution. And those are the losses that eventually eats into depositors' funds. We also engage in, or at least have the legal infrastructure in place to conduct what is referred to as consolidated supervision. So we not only have legal responsibility for deposit-taking institutions, but where deposit-taking institutions fall within a larger group of financial entities. For example, it is a group structure where, in addition to the deposit-taking institution, you may have an insurance company, a securities company, or an investment firm. There is the likelihood that those entities might have a pull or a contagion effect on the deposit-taking institution. And so we as a Bank of Jamaica, in the interest of oversight of the financial institution and protecting depositors' funds, would like to have a knowledge or an idea or the legal authority as far as possible to examine those entities. And it's interesting because earlier this week, UBS Bank, which is a bank from Switzerland, discovered a rogue trader who has been operating for the past 3 years that resulted in the bank losing as much as $2 billion. And that is a significant loss for a bank. And what they recognize is that the bank had an investment trading arm as part of its deposit-taking business. And so what the USBS regulators are looking at is, as far as possible, separating that investment management business from the core deposit-taking business. Why are they doing that? Such that if the investment management arm that is not covered under deposit insurance suffers significant loss, it doesn't call on depositors' funds. Now, what are some of the supervisory approaches we employ? Largely, as I indicated before, it's a target on risk management. there is a positive correlation between risk and return, and we all know that. We recognize that in order to make money, we have to take risk. But then there are times when those risks are not understood. There are times when those risks are not managed. And so that's the Bank of Jamaica's responsibility, that where it is that a financial institution is engaged in risk-taking activities, we want to ensure that you have the necessary resources in place to facilitate that. We want to ensure that you understand the risk that you're engaging in. We want to ensure that you have the necessary risk management infrastructure, the information technology infrastructure, so that in the event that these risks are realized, it does not have a significant or a negative effect on the financial institution's profitability, capital, and eventually depositors' funds. Is this part of the technical difficulties, I guess? Right. I've just made this is not an exhaustive list of some of the risks that a financial institution faces, and I will not go in each of them in detail, but this kind of gives you an idea of the various risk exposures that financial institutions are exposed to. Now, we mentioned initially that the Bank of Jamaica has a responsibility to ensure that the legal framework is in place for deposit-taking institutions to operate. In that respect, the supervisory authority, which is the Bank of Jamaica, has a responsibility to assess that licensees comply with the laws and regulations that are pronounced through the Minister of Finance and Parliament by the Bank of Jamaica. And that makes sense, because why is it that we have a responsibility to ensure that there is a robust legal infrastructure in place for financial institutions to comply, but we do not test their compliance? And that is one of our dear functions. Now, what are some of the principal laws that are in place